Hi, I'm Sherry. Recently, a few friends and also prospects come to look for me and asking me few opinion about the Singapore because they want to set up a company in Singapore and they don't know what is the pro and cons. So I have been working with some of the Singapore company for past few years. So here are some of my advice and also knowledge.
In the beginning, I already mentioned few of my friends asking my opinion whether they should set up company in Malaysia or set up company in Singapore. So if let's say you want to set up in a company in Malaysia and your paid up capital is less than 2.5 million ringgit Malaysia and the business gross income also not more than 50 million ringgit Malaysia, the first 150,000 ringgit, you only need to pay 15% income tax rate. On the next 450,000, you only need to pay 17%. If let's say your chargeable income is more than 600,000 ringgit Malaysia, then the corporate need to pay 24%. So meaning overall the maximum highest rate charge is 24%. If let's say you want to set up a company in Singapore, actually Singapore have a tax exemption scheme for the new startup company to support the entrepreneurship and also grow up the local enterprise. So the tax exemption for qualifying companies is for the first 3 consecutive year of assessment. So for the 4th year and onwards, they also enjoy the partial tax exemption. The corporate tax rate imposed is a flat rate at 17%. So you might a bit confusing what is the startup tax exemption and partial tax exemption. I use an example for a company that earning ringgit Malaysia 1 million for the current year. So the first 600,000 times 17% is equivalent 102,000. The balance 400,000 need to pay 24%. So the total tax payable for 1 million net profit or the chargeable income in Malaysia, they will need to pay 198,000 ringgit Malaysia. However, in Singapore, if let's say a SME that less than 3 years, if let's say I use back the 1 million chargeable income, because they can enjoy for the startup tax exemption, which is equivalent for 125 Sing dollar, and then after minus out the 125,000 from the 1 million chargeable income is only equivalent 875,000, and then this 800 over 1,000 will be times with 17% corporate tax. So in Singapore, they only need to pay 148,750. So you can see the difference. In Malaysia, we need to pay 198,000 ringgit, but in Singapore, we need to pay 148,000. Some of the people say, you cannot compare like this lah, because earning 1 million ringgit and 1 million Sing dollar, totally different story. Okay, doesn't matter, we use the conversion rate. Let's say the exchange rate is 3.4. And then the 3.4 for ringgit Malaysia 1 million is equivalent Sing dollar 295,000 round up. So for the chargeable income 295,000, you will minus out the tax exemption scheme, which is 125,000. So your net chargeable income is only 170,000 Sing dollar only. The tax payable is 70% times 170,000. You only need to pay 28,900 Sing dollar only. I convert back 3.4. It's only equivalent 98,000 ringgit Malaysia. Can you see the difference? 1 million ringgit earning in Malaysia, you need to pay 198,000. However, if let's say you convert in Singapore, you're doing business in Singapore, you only pay 98,000 ringgit tax in only. The difference by 100,000 ringgit Malaysia. So this is why Malaysia now it's very hard to look for overseas investor, and most of the overseas people or investor, they like to go to Singapore. In Malaysia, we need to pay 6% for the SST.
In Singapore, everyone need to pay GST at 8%. So from the sharing and calculation just now, I believe you already have the better idea and also point of view how's the tax implication for both countries. Thank you for watching.